Hi, this is Laurel. You're at Laurel's Real Money Talks. Today I'm going to talk about a very, what I call PhD level conversation, because most people that are investing do not know the difference between equity and debt. You say, well, that's kind of obvious. I know, but I've been an investor for a long time. And what I find in Shark Tank's like perpetuating it is that most people want equity. So equity is when you have and you own shares of the company. So you invest $100,000. I just had a guy do it to this Quantum Wellness, one of my great online companies I own. And you get 1% for 100 grand, right? Because this is a multi-million-dollar enterprise. Then, here's that's one way to do it. The other way he could have done it, but he wanted the equity, so that's fine. He could have done a convertible note. So a convertible note means I'm going to be in a debt position. I'm going to lend you the money, and I'm going to get an interest rate, guaranteed interest rate for the years. And normally you'd want to do 2 to 3 years on a convertible note. Then what happens is if you can see that the equity in the business is going to work, you convert to equity. Now, the problem is, if it goes down, you lose all your equity, you're out. There's no recovery, there's not a posture of recovering. If you're in a lending position and you're the bank, which I love being the bank, debt trumps equity, write that down. Debt trumps equity all the time. So if something, number one, the business isn't going very well, it's slow, don't convert, just stay in a note position, because at least you get a guaranteed return on the note. And it's collateralized by something inside of the business, whether it's a piece of real estate, inventory, intellectual property, sometimes a personal guarantee. If I was on the other side coaching the owner, I'd say, don't you ever give a personal guarantee. Done that, been there, bad decision. So debt trumps equity. So I would, as you look at investing, especially for those of you that are more beginning investors, you actually don't know how to run a company. So getting equity of something you actually don't know how to run and don't know how to really contribute to, be in a debt position. Because even if the thing goes bankrupt, you lose it all, as long as you are liened and recorded in debt, you actually will be in first position in a bankruptcy in the bankruptcy court as the assets get sold off. So always, 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 if you're looking at your investment portfolio, the way I want you to think about that is you had, draw a pie chart and say, well, if I had 100, 500,000, or $1 million, what would I be doing with it? And many times, I want you to diversify, but I'm a lender in real estate, I'm a lender in gas and oil, I'm a land lender, I'm a business lender. I love being the bank, because I just get these interest payments, 8, 10, 12, most of the time I'm a 12%er, sometimes I even get 15%. Pretty rare I take 8, I don't need to. But if the deal's good and I want to convert, sometimes you got to do a little bit lower. And then on a lower 8, I take a bigger percent of equity. So I know all this stuff. I can't wait to teach you all this stuff. That's what Laurel's Real Money Talks are about. I want you to go to AskLaurel.com. I want you to ask any question you want, ask for any appointment. You're going to put your name, your phone number, your email. You're going to put all this information in. And let's have a conversation. And then those of you that have a portfolio, we have this amazing, what we call scenario software, where you can actually list your assets. You're going to send them in. We have a private appointment, right? Everything's confidential. And we're just going to show you what your stock market awful portfolio is doing. A lot of you don't realize you're paying amazing fees. And you're paying it to a broker or financial planner who actually doesn't know anything about the business anyway. And in the market, if you really think it all the way through, you don't have any effect or impact on correcting that asset. I know a lot about business, so that's why I buy private businesses, because I know how to go in and fix them. If I have Chevron stock, what am I going to do? Go tell, the chairman of the board to go fix the company? Stock market investing is for a few people. It is not for the norm. The norm, I think, should be off Wall Street. Your local businesses, your local laundromat, your local car wash, your local restaurant, if you know how to do that, whatever's in your wheelhouse. But you should own some real estate, you better own some gas and oil. And what I'm really teaching you about is how to be the bank, how to take guaranteed interest positions on first positions on assets. It is the greatest way to invest, smart way to invest. It's actually a very conservative way to invest. You say, well, what if the asset doesn't work? Well, then you get it back. But anybody can flip a piece of real estate, hire an agent or a broker to do it. It's not difficult to protect your assets in some of these first positions. So the whole conversation here today, debt or equity, debt always trumps equity. It's always up to you. I'm not a financial planner. I'm just a damn good educator. So love being a bank. So if you want, let's have a bank conversation. So go over to AskLaurel.com, put in your name, your phone number, email, say, Laurel, I want to talk to you about being a bank. Call me now, put your number in, and we'll be on a phone call. I'm here to help. I'm Laurel at Laurel'sRealMoneyTalks.com.